Don, well, good morning. It's first Monday in December 2019. It's a brand new month, but the last month of the year. We're coming out of Turkey Month, and uh, I wrote this morning that it's a good time to sit and kind of reflect on the successes and the failures of the past calendar year, and make your plans. Learn from both of those. Make your plans for the next year, and um, it. I do that every year. I find it a helpful exercise. Um, how was your Thanksgiving, by the way?
Real good. I didn't put on but 3 or 4 pounds, so I got to get to work. I hadn't quite got my weight up yet, exactly where I wanted to
You want to get your winter weight on?
be. Yeah, in case we have a real hard winter, I'm gonna be well prepared. But
well padded, right?
yeah. I was going to ask you a couple of questions this morning. Since I hadn't done very good preparation, I'm going to ask you the questions today. And so the gun is to your head, but
Right.
give me an idea. Give me an idea of what drives this past weekend. Give me some idea in your mind. What did you do to prepare for the portfolio, either buys or sells or no action?
Yeah, I'll do that. I think I'm going to start off. That's a really good question. I think I'm going to start off by, let me see here, whether or not I'm going to pull up a file that I want to open. And
You can tell this is not too planned because I stumped him already.
let's see here. Yeah, you know what? I've got something to show everybody. That's the thing, and I want to make sure that I have it open before I start digging around in my. Well, that's not it. Well, I'm going to have
see
to.
why it takes Paul and I so long to do anything. And if he's a lot faster than I am when it comes to the computer situations, but while you're looking for it,
while I'm looking for it, and I got it up here. Okay.
One of the things that really drives our decision models are basically a model. It doesn't have anything to do with what I think or Paul thinks, or and we have a level of. Paul is going to talk to you about our portfolios just a little bit, but I have duplicate. We have matching computers on matching programs, and so there's an element of safety there that we can use, and we've used it. We've had to can I copy this or that back and forth and things like that. So it's an element of safety that it's not contingent upon one person or one anything. We've got levels of backup and things like that, so there's a lot of continuity built into it.
Yeah, that individual backup that comes in handy usually when I start programming and I forget to save my stuff, and I end up programming myself into some kind of hole I can't dig out of and can't get back to where I started. And I'm usually on the phone to you. Hey Don, can I copy that file I gave you a couple months ago?
Yeah.
Well, listen. Let me share my screen, and then I'll point you to a couple of interesting things. You asked me what I do to get ready, and I'll tell you that just starting off that here's a spreadsheet, and we've built this spreadsheet to make it easy for folks who might be have their accounts at brokerages which don't have a rebalancing tool available for you. And I'm fortunate. I'm at Interactive Brokers. Interactive Brokers has a, what do they call it? A rebalance portfolio thing, which essentially does the same thing that this spreadsheet does. But we'll make this available to you if you think you need it to reallocate your portfolio. What we do is we start with a current portfolio value and how much will permit the the positions to vary from their targets. And we always recommend about 5% maximum. You can try to keep things tighter, but it might mean rebalancing more frequently. Any of these cells that are in yellow are input cells. So you put in the symbols that you're holding or want to hold, how many shares you have. If you don't have any, you put in 0. Put in the current share price and your target allocations, and that comes off their subscriber site, tells you how much of what to own. All these other blue cells that are a little darker, they're not yellow, everything is calculated, and it will tell you how far off you are and whether you need to buy or sell or hold, and how many shares to trade. A negative number means to sell it. Hold is 0, and a buy is a positive number. And then how many shares you'll have after the trade, what your balance will be. And it'll give you a position value after your trade, and you'll see what your allocations will be. And nobody can get exactly the the recommend. If we say, hey, look, try to own 10% of KLAC, for instance. If you buy this was a while ago, the pricing, but if you bought 114 shares for this value of account, you'd own just under 10%. Buying another share would put you over. And then it prints out, actually spells out here your trade instructions. No trade for this. Sell 123 shares of this at a limit of that. Buy 140 shares of this at a limit of that. So, the first time you try this, it's going to be, you're going to have to think about it a little bit. The next time, boy, it gets really easy by the third month. It takes about 10 minutes to kind of put in, if you're selling stuff you own, you're just going to change your target allocation, and you plug in what you want to buy and your target allocation and what the current price is. It'll figure it all out for you. So that's where kind of I start on the first day of the month when we're trading. Just taking a look back at this past month, there's a couple of things that we get. Now, Don, you and I pay closer attention than most, to this stuff, and we watch in particular as a benchmark for ourselves is the moderate, or as we call it, the defensive growth portfolio for the NDX. Every day, every business day, this spits out for us what happened the previous day, a month to date, quarter date, year to date, and over the rolling 12 month. And then an inception performance, and then we annualize that, and it contrasts it with the S&P 500. So on Friday, which was the 29th of November, you can see here the portfolio was down 28 basis points. The S&P was down 40. Month to date, the S&P had a very good month. We would say that's also a very good month because it wasn't down. We're really not worried about outperforming every month. This is a defensive or a moderate growth portfolio. And one of the most important things to us is down here. We look at quarter to date. We were down. Our worst period drawdown was significantly less, almost a third less than the drawdown of the S&P. That's what we're really looking for. And if we go back to inception, we can see that it was half of what the S&P was. So, then another thing that we look at is this chart here, and more importantly, our little blurb: Liberty, when it begins to take root, is a plant of rapid growth. And that's something that comes out every day. It amuses us. It's a collection of about 150 different little sayings that Don and I have collected over the years and added into our little database. And every day, randomly, a phrase comes up to either inspire us, make us laugh, encourage us, or help us keep perspective. And here's another one. This is some folks. This is something we actually make available upon request. Just go to our website at stonebarnportfolios.com. Sign up for the weekly updates. And here, the different portfolios that we have, we give weekly statistics. So we look at the last week, quarter to date, year to date, and again, rolling 12 month, and the current drawdown. If there is a current drawdown, and how many days that it has lasted. as of the end of last week. So again, this is the close 11/29. We've got aggressive growth. Probably had the best week of anything other than the NDX index itself. Was up over 1% for the week. Year to date, up about 22. And you can compare and contrast all these different portfolios and strategies, and take a look at them. And so we watch this day by day. Again, here's another one of our sayings that came out of the database. When everything seems to be going against you, remember the airplane takes off against the wind, not with it. It was Henry Ford. This is what I keep an eye on this, and particularly what I'm interested in is in any of these portfolios, whether or not the risk that I'm taking to get the kind of performance that I'm looking at is worth it. You know, I'd like to see that we've hit new highs at the same time that these different indices have, but that doesn't always happen. But other times, you know, we're at 0 and they're at 40. So it goes back and forth.
Well, the markets have been rather impulsive over the last period of time, and because of our commitment to both fixed income and to the low volatility areas, it's pretty natural for us to underperform.
Oh yeah, yeah. When the markets go straight up, there's nothing beats a market that's in a strong rally. You can't, other than holding it or having a leveraged portfolio. You just can't beat it. So this is again, I'm not looking to see if we're beating all of these different benchmarks or indices. I'm looking to see if week by week, quarter by quarter, even over here day by day, whether or not our strategies, our portfolio strategies, are behaving like I think that they should, given the extensive testing and development testing that we put into each of these things, and they are. So far, there's nothing that's operating outside of parameters. I'll mention that if you're receiving these weekly updates that you'll see today, there's a little bit different naming convention here for them. And that's, we had some comments. It was kind of difficult for folks to follow what was what. And we decided to try to use more descriptive names. So this is for instance, this top line is the Stone Barn NDX that tells you where we pull the stocks from. Aggressive growth portfolio. Then we've got the defensive growth, and then we have a managed volatility portfolio. Again, all these are NDX portfolios. We're selecting stocks from the NASDAQ 100 index. These next three are benchmarks that we just watch to see how they're, how we do next to them. You've heard of our Stone Barn Equity Index portfolio. We've renamed that the ETF, so it's an ETF strategy. Tactical growth, and we have a more conservative version of that, the Stone Barn ETF dynamic allocation. These are simple little 4 ETF strategies that have some allocation algorithms in them. They don't trade very frequently. And finally, we've got a portfolio called Stone Barn Stable Risk. This is a fairly new addition that we've just completed testing on. I will say that these two, the ETF portfolios, they're only offered in managed accounts at this time, where they're not available by subscription, even though we're reporting on them here. This research has been licensed by investment advisory firms, and by agreement, we don't put the instructions or allocations out there for that. If you're interested in more about that, we're not really an investment advisor. We're a publishing firm and an education firm, but we have licensed this technology to investment advisory firms. We can put you in touch with somebody that can help you with that. The stable risk is a combination of our low volatility portfolio and a short-term yield ETF. There's nothing tactical in it, it's not going to burn the doors off of anything. It's really made to do about 6 or 7% a year, and to keep the drawdown at about half of that, half of the maximum performance over any 3-year period. So it's a very, very stable, and it was designed around the drawdown rather than around the performance. So it's for folks that really aren't going to sleep well if they wake up one day and they're down more than 5% in the portfolio. If that's going to upset them, then this is an alternative for them. So, but this is kind of my long way of showing you what I look at, what I watch on a day-to-day basis. A lot of this stuff is generated internally. This is available, this kind of stuff. You just go on a website and sign up for the weekly updates. You'll get this every weekend. The latest that comes out is on a Monday morning, depending on what happened over the weekend. So we just sent this out today. It's a Monday. The reason for that was because it was a holiday weekend. We had family in town, and we had to make a Cabela's trip, so with my grandson. So that took up time, and it meant that this didn't come out till Monday morning. But
well, it shows that while we do like to keep things rather simple, we also put ourselves in a position to put the facts right in front of you, and you can't hide from that. So, I think that was a good explanation of what goes on from how we make decisions to get to the point that to disseminate this to our subscribers. So.
Let me ask you a question. You get the same kind of information. You and I discuss our comfort levels. You and I designed these things together to meet our investment comfort levels, both in terms of risk and in terms of return. What would you say is the thing that gives you the most comfort? You get all these data points too, and all these charts and graphs, and you look at this. What gives you comfort, or what keeps you awake at night looking at this? Maybe I shouldn't presume.
Well, I think the thing that I like most about this, and this is kind of hokey in a way, but while we write a newsletter, you and I both personally put all of our own personal money at stake. So we reap the same benefits as our subscribers. And while I don't, in total candor, I personally, or my wife she got a lot more money than I do, by the way, but we have either family or someone in almost every one of them, to show you that it's not something that we're probably selling in terms of some great theory or somebody, our superiors are telling us that we need to do this. This is exactly what we do for ourselves. And that gives me a lot of comfort, and I get mad at myself sometimes. Sometimes I have to, but we got a lot of skin in this game. I mean, all the skin, and I got a lot. A skin I'm talking about now. Hey, that's my question for the day. I think we ought to quit now.
Right.
You did all the work today, but I appreciate the insight, and you get a little bit more than just meets the eye.
Yeah, I could talk about this all day, and I'm afraid sometimes I get started and I don't really, unless I'm paying attention, I don't see the listener's lack of attention until his eyes are rolled back in his head. And then I know it's time to quit. But I enjoy this stuff. I live and breathe it every day. I know you do too. And I'm right there with you. What I own, I've got my money invested the same way, and my family members. So I have skin in the team too. I get more on top now than I used to, but yeah.
Well, I'm looking forward to the month. It should be an interesting one. And as we close out the year, historically, it's been a little bit of an upward bias to it. But who knows? I feel comfortable with what we got and the trades we just made today, and
Yep.
We'll be ready to go.
Yep. All right, Don. Well, I'll touch base about halfway through the month as we get closer to Christmas, and we'll catch up again then. In the meantime, let's hope it's a good month. Finish out the year. See ya.